Hello everybody, welcome back to today's YouTube video. We're going to be talking about FETCH.AI. It's another crypto that's been popping off alongside SingularityNet. The ticker symbol for that one is AGIX. You're probably watching this video because you've seen that coin. It's been popping off lately. The whole AI narrative, it's been pushed hard at the moment. Now, in the short term, we do have a bearish setup, 7 to 8 times out of 10, ascending wedges do break to the downside. You currently see we are pushing through that level. So in 13 hours time, if this does close below 44 cents, I would be bearish. I would expect it to pull back to this green 50-day moving average. Now, there's another reason why this trend line that goes way back, this is very crucial. If it fails to hold this, I do expect a lot more downside, more than a 50% drop from here for this crypto. You can also see we have a bearish divergence. It's been forming for the last 2 months. So for some reason, if we do run up into this trend line and it does make a higher high, you're talking about 78, 79 on the RSI here, and we do push above this 61 cent high. You're looking at about 71 cents would be the next level to watch. As you can see, it acted as resistance and then acted as support here for many daily candle closes. You can also see the very next level I would target is this 88 cent level. Now, if we flip over to the weekly, it looks a bit more simpler and cleaner. As you can see, we haven't closed a weekly candle above this 88 cent level, and then your next area of resistance around that 71 cent level. You also do have a volume defined pocket right here. So if we do push up through that high, you are looking at those higher levels. Now, this weekly candle that formed back here on the 6th of February, this is a topping tail candle. So this is a bearish candlestick, especially after you've had a massive move from the lows. I'm expecting profit taking here. As you can see, the weekly RSI is also overbought. Now, you got these crucial trend lines here. This one that goes all the way back to May of 2019, you can see it acted as support, resistance, support. Then it also held support here. And now I'm expecting, if it fails to hold above this 50-day moving average, this is crucial for FETCH.AI to hold. If it doesn't hold, I'm expecting it's going to fall through, push back up to the 50-day moving average and hold it as resistance. And it's going to fall back down to this 200-day moving average, which at the time where I think it's going to move up, as you can see, the 200-day moving average is rising. Same with the 50-day moving average. I'm expecting that 19 cent level. So if we zoom out, just picture this little section right here where you can see these moving averages are rising very sharply, very quickly. Now, if we go back in history, we can see this crypto has done something very similar. It's nothing out of the ordinary. So here, you can see once it had a golden cross, you can see that the price action was well and truly above that 50-day moving average, also well and truly above that 200-day moving average. Now, once it fell back below the 50-day moving average, you can see it held it as resistance. It couldn't get back above that 10 cent level, and then you can see it was like a magnet. It pulled it back down to that 200-day moving average, and it come into contact with it. So now, if we have a look at the next one, this was September of 2020. The next one was when Bitcoin was hitting those $65,000 highs. As you can see, we had that top, it went sideways, it fell below that 50-day moving average, come back up into it, acted as resistance. It only closed a daily candle above, and then it's quickly pulled back below, acted as resistance the entire time. So I do think, and as you can see, it also touched that 200-day moving average. So what I'm thinking, I think this is it's like a fractal. It's forming the exact same, those previous 2 cycles. So as you can see, we had a golden cross, massive move up, price actions well and truly trading above that 50-day moving average, and the 200-day moving average, it's a very, very long way distance from it at the moment. Now, if we fail to hold this level, we push below 37 cents and we rally back up into that 50-day moving average, I will take a short position, as I do expect it to fall back down to that 19 cent level. Now, this 19 cent level, let's have a look at it. This line is also key support and resistance. So you can see it acted as support, chopped sideways here, acted as resistance here, held support throughout the 2021 bull market. Now, that's the level that I expect it, once this 200-day moving average rises, as you can see it's predicted to rise, I do expect it to pull back down to that 19-cent level. So all the charts are telling me short term bearish. If we don't get above that 50-day moving average and it falls below, I would be even more bearish. If you've got longs, take them out. It's too risky to be in this coin. It's likely going to fall back to that 19-cent level, and then you can buy at that 19-cent level. But anyway, guys, this one's a short for me. I do think it's going to go a lot lower. If we get below that 50-day moving average, that's very crucial. It's the most important point for this coin. But anyway, guys, make sure you smack that thumbs up button, hit the subscribe button, and I'll see you guys in the next video. 𝗕𝗪𝗠𝗃 out. Peace.